Credit is one of the most popular ways to make your purchases these days. You can buy nearly anything, from cars to homes and everyday things like your morning coffee. It's so common that most of us don't think twice about it. But what happens when you have bad credit? Lenders look at your credit score, and if it's below average, you're going to have a hard time being approved, or you'll have to pay higher interest rates. Avoid paying more by following these tips to improve your credit score. Pay your bills on time. Your payment history makes up roughly 35% of your credit score. If you habitually pay your bills late, you can't really expect to have a good credit score. But you can boost your score by several points with timely payments. Most services have a recurring billing program, so you can automatically pay your bills. If they don't, get in touch with your bank to schedule your payments. Keep credit balances low. Credit utilization makes up roughly 30% of your credit score, so the better you are keeping your balance low, the higher your credit score will potentially be. The best way to avoid high balances is to only use your credit cards for big purchases and pay them off quickly. This will also show lenders that you're responsible with your finances. Don't overextend yourself. More credit cards mean more monthly payments to deal with, more interest rates, and even more financial responsibilities. When you miss payments on any of your cards, your credit score will take a hit. Instead, limit the number of credit cards to those most useful to you. If you don't absolutely need to open a new line of credit, then don't. Monitor your credit score. Your score is a very important number, and if you aren't keeping an eye on it, you can't dispute any errors that pop up, whether they're real or someone that's stolen your identity. The three big credit unions can provide you with an annual update of your credit history, and some banks provide credit score tracking that won't affect your score. Minimize credit checks. Every time you apply to finance a purchase, like a home, vehicle, or a store-specific credit card, they check your credit to see if you qualify. When you have a high number of checks in a short amount of time. Diversify your credit. One good way to demonstrate how financially responsible you are is to have various forms of credit. If lenders and credit bureaus see that apart from credit cards, you also have auto loans, mortgage, and student loans which you pay promptly, then they will see you as less risky than someone who only manages one credit card.